Hi, thanks so much for joining in. You're watching BQ Prime, and this is an earnings conversation. My name is Alex Matthew. Joining me today is Sunil Bohra, the Executive Director and Group CFO of Minda. Sunil, thanks so much for taking the time.
Good morning.
And I think this is a good time for the auto industry and indeed for the ancillary players as well. The numbers look good. You've managed to maintain EBITDA 0.08%, and EBITDA growth is at 26 odd percent, and the PAT number is up as much as 30%. I think this is on the back of an improvement in revenue as well. What can you tell us about the key highlights that stood out to you in the quarter gone by?
So I think in the quarter gone by, Alex, there has been a positive momentum across, I would say, many segments. So starting with the alloy wheel, which has been doing significantly sort of, I would say, better compared to other businesses. And so is the lighting business, followed by the controller and sensor business and the EV components businesses. So there are a lot of businesses, while every business has contributed positively. The ones which I took have actually outperformed the others, as this has been largely expected and on the lines of the premiumization theme, which we have been sort of talking all along. So in fact, as you would have noticed, the kind of growth we have been guiding towards the lighting, alloy wheel, etc. The board has also approved setting up of a new alloy wheel plant of almost like 540 odd crores to set up a new greenfield capacity, because now we are running short of space in our existing plants in Gujarat, in Bawal, and in Chennai. So we will set up this plant somewhere in the north. We are yet to finalize the location. The point is that all these segments are doing pretty well, and we are pretty confident that this is something which is here to stay for many, many years to come, because the penetration of alloy wheel is still less than half of what the global benchmark is, right? And same way, the penetration in terms of LED lights has been increasing like never before. In fact, some of the complexities which are trickling into the tail lamp. In fact, today a tail lamp is more expensive than a headlamp. So the technology is shifting so fast, and it has been throwing a lot of opportunities from the EV perspective. The kind of kit value we have of almost like 40,000 rupees of EV kit value, that's is uncomparable in the industry. So we have been leading that effort on R&D, on product launch, a lot of effort. So it's a culmination of a lot of positives, a lot of initiatives which we have been driving. And our goal has been consistently, how do we outperform the industry by 1.5x? And I'm pretty happy that we have been doing much, much better than that. And as you would have seen, for the half year, we have grown by 25%, whereas industry numbers half year to half year on an overall basis are almost like flattish. Though there are segments which have done better, and there are segments which have not. But on an overall basis, in terms of number of vehicles, is flat, whereas our revenue is like up 25%. So a lot of activities, a lot of things, actions going on ground.
No, certainly. I take your point on the tail light cost, because I had to replace one recently, and I know that it is quite costly. Having said that, I see that the revenue contribution for the lighting segment is at around 23%. You've maintained that in the second quarter. Could you take me through the contribution that alloy wheels have, considering that I think is what you're focusing on most when you say that these are the segments that are improving very quickly?
So alloy wheel business has been actually growing, I would say, very, very fast. So overall, as of now, our alloy wheel segment, if you see, has done revenues of roughly 750 crores for the quarter, and it is almost 21% of the total pie. And we do expect, with the current pace, it has consistently been increasing its share in the business, and we do expect it to maintain or grow, because others are also growing, and there are new businesses which are creeping in. So even to maintain this 21% pie is a challenge, is a good thing. So the business.
But how does it compare to last year, say?
Last year, I think it was same, 21%, but
if the pie has grown.
Yeah, the base itself has grown significantly, right? So the casting business last year was 20%. Now it is, I think, 21% itself. But if you see absolute terms, it was 600 or 610 crores something. Now it is 750 crores something. So the business actually has done pretty well. Whereas, because you see some other segments like acoustic, it has not grown to that level like others are, right? So acoustic has been like 182 to 10 crores. So there the growth is not that much, because we are already at 65% market share, and there is very little to sort of grow. And a large part of our business is in Europe, which is not doing pretty well. So there are patches which are not doing good, and there are patches which are doing pretty good, like alloy wheel, lighting, and the other segment which has your controllers, sensors, and EV components.
So if I look at it, you're talking about switches, lighting, castings, and now others that are comparable in terms of the contribution that they have. Others now contributing as much as 16% to the revenue pie. That you're saying is going to stay the same.
No, that will grow more.
That will grow more. So we're likely going to see a 2020, right? If you look at that in all probability.
So the way we do is, Alex, the moment any business actually has crossed sort of 10-11% kind of a pie share, then we start and sort of show it separately so that to give you a better picture. As of now, in the other segment, all the business are in single digits, nothing which is like 10-11% to sort of qualify for a separate segment per se. So maybe once that happens, yes, you are right. Initially, it may be 2020, but gradually we will try and carve out a segment out of others if once it crosses 10% kind of a threshold.
Okay. Just trying to get a sense, you've in the operational highlights that 86 acres of land has been acquired in Khed City in Pune. But when you spoke about the 540 crore odd project, you're talking about something in the north.
Yes.
Help me understand whether what this piece of land is for. And I also understand that 3 more acquisitions are in the process of being concluded.
Yeah. So honestly, Alex, if you have to take a step back and why we are doing so, I think it's very important to understand that first number of projects we have been delayed because of land. So last November, the board had approved setting up of 60,000 alloy wheel capacity incremental in our existing plant at Bawal. And there is a government land next to our plant. But you'll appreciate the challenges in administration system, and getting this land has been a lot of effort, and still we don't have land in hand. So what we have then decided as a strategy, and we have been working not because of this reason, but even before that, we're trying to build a land bank so that whenever there is a need, whenever there is a business to take, we don't run for land, we not scout for land, and then project gets delayed. Also, what happens is today a lot of our plants are sort of running near capacity. So before giving a new business, customer also ask, do you have land? If I give you a business today, what is the time frame you will be able to give me product? So once having a land in hand definitely helps a lot. B, when you talk of big parcel of land, your ability to negotiate with the governments and get better incentives, because you are going to uplift the local environment, you are generating employment, it will bring up socio-economic upliftment, a lot of economic activities happening. So government also incentivizes people to come and set up big investments, big infrastructure. So we have been able to maybe get some better incentives from the government in, say, in Maharashtra also. And that's where our endeavor is to get more sort of land such parcels in whichever regions we operate.
No, certainly. And of course, when you're catering to OEMs, you have to be in those automotive belts or pockets around that Chakan region and also up north as well. I get that point. So 3 more you're saying, and how quickly will those acquisitions be concluded? What is the kind of cost that you're setting aside for these acquisitions?
So this land will cost somewhere between 500 to 600 crore total.
The Pune one?
The new ones.
Okay. So all 4?
Because excluding Khed. Yeah.
Okay.
So because the north itself, what we are talking with the government is almost like 100 crore parcel, and the land rates in north are like crazy. It's like 3.5 to 4 crores an acre minimum. So one single patch itself might cost you 350 to 400 acres. Maybe another 100 crores in south and 100 crores in west. So maybe in all around 600 crore of land investments.
This year itself?
It will be, this year itself. That's our endeavor. In next 6 to 10 months, we should have this land in hand.
Okay, fantastic. I will come to a data point that we just got, and you've said that things are looking good for the automotive industry, in particular for you, because you're growing at 1.5x. I look at sub-segments, as you pointed out, and ahead of the festive season, there's a lot of hope that this year will be a good one. But at the same time, we're seeing that there is the highest ever buildup of inventory. I think to a certain extent, one could explain that by saying that there is anticipation of growth in sales. But that is a worry, wouldn't you say, that there is a significant pileup of inventory? How are you looking at that, and what is the kind of communication that you've gotten from your customers?
Yeah. So Alex, I think that's where normally we never comment on revenue, because people ask revenue growth. We always say 1.5x of the industry growth. And why we say it? Because our destiny is linked with the OEM volumes, right? We are not selling to the end customers. Now, whatever OEM wants, and our 90%, 92% of revenues come directly from the line fitment. So whatever vehicle get produced, our endeavor is we maintain our share of business and grow share of business. Now, if market does not want those kind of vehicle, if there is more inventory and there is an inventory cut, obviously the entire ecosystem will have an impact. It's not only Minda, it's like everybody else. So that's the only reason we say whatever industry grows, we grow 1.5x. If industry doesn't grow, and still how do we grow? That's what our endeavor has been.
Have you been ramping up over the last month and a half in terms of production?
Yes.
What can you tell me about that? You're saying that you're close to capacity, but what is utilization level across your various segments?
So we have 32 businesses. To be precise, and there are businesses which are operating at 110% capacity. There are businesses which are operating at 80% capacity, 85% capacity also. So it's a big range from 80 to 110%.
Okay. You've already described one board approval, that 540 crore for capacity addition. You've described another 600 odd crore for the acquisition of land. So there's a significant amount of money. Is there anything besides this that you're going to be spending on capacity expansion in this current year?
So there are already, if you see our presentation, I don't know if you are readily available, there are almost like 7-8 projects currently ongoing. There are 2 projects of alloy wheel, lighting, switches. There are multiple projects currently which are ongoing. So if you add all of them, it will be something around 1,500 odd crores of 15 to 1,800 crores, if I remember that number correctly. And some part of it is already spent, some part of it will spend in next 12 to 18 months. So the way we have been working in terms of capital allocation is currently all these projects which we have announced, they are sort of we have enough what you call internal cash flow to sort of meet this requirement of capexes. Only there might be some short-term need. Yes, for land bank we might have to go to market to raise some funding, and that's why the board has also approved of up to 400 crores of NCDs to be raised, and that's primarily for buying the land bank.
Fantastic. So you are maintaining your guidance of 1.5x of industry, I would think.
In fact, I would say more than that. When we say 1.5x, we say it for a next decade, right? In short term, we are actually doing much more than 1.5x. As I said, first half industry growth is almost flat. Yes, PV is better, two-wheeler is down, etc. But our growth is up by 26%. So I think that itself shows the kind of outperformance which we have been able to deliver.
Last question, and that's on margins. You managed to maintain them, as I said at the start when I introduced it, 11 or just over 11% comparable year on year. Are you seeing any pressure on the pricing at all, or do you think that you'll be able to maintain or improve on these?
No, we are in a competitive world, and these pressures are continue to be there. It's not like pressure will anyway go, right? So it's our ability. How do we bring economies of scale? How do we sort of optimize our costs, and how do we be competitive? Because it is not that you can increase your margins the way you want, because if your competitor is giving X price, you can't get X plus significant. So I think we have been working very, very aggressively in terms of our cost management, and that's the reason we have been able to deliver the margins at around 11%.
But the bottom line is that it will stay where it is right now?
That's what we have been working on, and our endeavor is that we should be able to manage 11% plus minus maybe 30-40 basis points kind of a range for medium to short term.
Fantastic. Thank you so much, Sunil, for taking the time, for speaking to us, and for answering all of the questions that we had for you.
Thank you.
All right, viewers, there you have it. The management of Minda speaking to PQ Prime. Do stay tuned. Lots more coming up in just a bit.